Yo, what is up today, guys? Today we are going to be doing my first ever trading recap video. So as you can already see on my screen, I took two trades today. It is currently May 18th, 2026, and if y'all don't know who I am, I go by the name Rods Trading, Rods FX, all different names, but my overall name that everyone knows me by is Rods, and my Instagram handle is Rods FX if y'all want to check it out. But let's get started. So today I took two trades. I took one long and one short, literally right after each other, which is kind of crazy. One hit TP, next candle I enter a trade and hit TP right away again. So as y'all can see, both are right here, and then I have both of them being taken on NQ or NASDAQ, and then we use confluences from the S&P 500, of course, to take these trades. So let me just get down to explaining, and let me actually erase some of these. Oh, let me get some of these stuff off. Hide drawings, hide position, and we'll just hide the indicators. Or actually, we'll hide all. Alright, so market opened right here at 8:30, right? So overall, from the start of the day, we did have a very, I want to say very bearish bias today, because we do have this low down here, and yes, not yesterday but last week, the last day, Friday, we did dump down all the way down here, and then this opening day of Monday, like we had a nice run up first, and then we're coming back down. So if we go to the 4-hour right here, I'm going to be showing you how to get your daily bias. So on the higher time frames, we go like 4-hour and daily. We see we were in a bullish trend, higher highs, higher highs, higher lows, higher highs, higher lows, higher highs. But then we flipped bearish, and we did lower lows, higher lows, lower lows, higher lows, and we're just gonna keep running down, as we can see with markets to open. And we're probably gonna be targeting this low right here. Oh, if I can get it, this low right here is probably gonna be one of our main targets. And then as you can see, it just brought back all my indicators, but we're not indicators, but all my levels I set out. So we're probably going to be targeting that. So then we're going to drop down to the 15 minutes with market open. There we go. And we see as soon as market opened right here at 8:30, we just got a huge dump down of the 15-minute candle, and that closed through these two bullish 15-minute fair value gaps. But the thing is, we did have another 15-minute down here, the first 15-minute fair value gap of the leg up. So it wasn't necessarily that we were gonna straight go down. So this is why when we closed through those two, we just ran up a little bit, but we didn't go crazy back up. We kept going down because there's another 15-minute right here. Now we go to the 5-minute, and we see we have this 5-minute low right here, which is also a 15-minute fair value gap right here. So that was my main target for today, and the first target I took, let me see, right here. We're gonna go back to the 1-minute. Where are we at? There it is, right here. Okay. So then we have market open. We come dumping down, right? Dumping down. We have this huge candlestick down, and we actually, with this, touch that 15-minute fair value gap, which I'll end up showing y'all with all these right here. We touch this 15-minute fair value gap, and we take out that 5-minute low, whereas ES does not. Over here on this screen with ES, we can see that that level is way down here, and ES is way up here still. So that SMT was one of my main confluences to know that it was going to run back up a little bit, just retest the fair value gaps up here. So we also did leave this 1-minute tiny fair value gap, and even though it's so small, it still does play a big role in what's going to be happening. So with that external SMT we saw, and then matter of fact, we had another SMT, an internal SMT right here, this little one, because as you see right here, it didn't sweep it. So right here, this was lower than this one. So we had two SMTs, an external liquidity SMT and an internal liquidity SMT. And then off of that, with this huge break of structure on the 1 minute up and inversing that 1 minute, and that was my first trade. I placed it right here. Let's actually get rid of this one, and we'll get rid of this also so I can show y'all better. So our target was going to be this 5 minute up here. We had this 5 minute on the first 5 minute in the leg down, and okay, it just keeps going everywhere. But we entered our trade right off of that 1 minute break of structure, inverse for value gap with those SMTs, and we targeted that 5 minute for 80 points, and our stop loss was about 50 points just because this candle was humongous. I didn't want to place my stop loss all the way down here and be negative RR, a super low RR, which means risk to reward if y'all didn't know. So we entered right there, and in about 5-6 minutes we banged out that trade. We also had this 5 minute that we were in, but I really had a ton of high confidence and good conviction that it was going to keep going higher to at least this first fair value gap, as well as ES was just completely running up, as you can see right here. Let's hide the indicator. ES was just running up. So right here, when we had inverse this 1 minute, ES was already halfway through the run. So I was pretty high confidence with that. We banged out that trade. Next thing you know, as soon as we hit TP, ES actually has a huge SMT of this high way up here. So we saw that SMT, and then we tapped this 5 minute, and then we were overall bearish on the day. So that just gave me a ton of confidence that we were probably going to go back down. So I placed a short right there as soon as we inversed this 1 minute right here. Let me show y'all. We inversed this little 1 minute that we created, and we had that SMT. We tapped this 5 minute in the first 5 minute in the leg. Overall bearish, high confidence that we were gonna go down. My target being this low down here. I targeted 110 points with that, I believe. Yeah, right there, 110 points, and my stop loss was around 60 points right there. We had when I placed it, I had about a 1.8 risk to reward, but right there, yeah, 1.84 risk to reward, and we banged that out in about like 5-6 minutes as well. Probably longer, like 8 minutes, 10 minutes, but we banged it right after the last one, and that was taking off that SMT, tap of the 5 minute, and inverse of the 1, and then we just straight displaced all the way down. And both of these were really sniper trades at the end of the day, because as you can see, place this trade, hit TP, ran all the way down, placed that trade, ran all the way down, hit TP, and then it just ran back up. Like, imagine if I would have been greedy, held longer. Like right here, I could have held longer all the way up here, which is what a lot of new traders do. They'll hold, trying to get the most profits they can, being greedy, and then they would have ended up getting stopped out right there, right? So that is what we don't want to do at all. And then this one, I could have held maybe down to this level. I'd set way down here, which it would have hit way over here if I would have never gone break even, right? But the way I trade is I take break evens once a good draw gets hit. So once this draw would have got hit, I would have placed the break even right here, and it would have eventually just came and got broke even, then ran to my TP. But we're just gonna take the profits we can get. 110 points is amazing, plus the 80 we got earlier, so it'd be like almost 200 points on the day. So we don't need to get greedy. We don't need to try to, even say if we try to get if we try to get a 2 RR right there, like, so if we try to get that 2% RR, that's just, we're gonna literally run down, take that level, barely miss our TP, and then run back to our break even. Like, bro, this is just not worth it at all. Just take what you can get from the markets, set it on the level or a little bit above the level, so you know you're gonna hit, because that's what the market does. It grabs liquidity and then runs back to take you out and take more liquidity, right? The market doesn't want you to win. The market is built for the big chains and the big banks and everyone else to win, right? You're not their priority. So what you want to do is take your profits while you can and not hold forever, right? Take your piece of the pie, get out, get that profits. Because if you think about it, we're going to be making a ton of money off these little trades times a ton of multiple accounts, right? So those were my 2 trades on the day. Really banger trades. If y'all have any questions, feel free to leave a comment. I can make new videos for y'all if y'all want to learn some of these little indicators and levels I have here. I could teach you how to use them or anything else you need. And thank y'all for watching. Please subscribe, like the video, and see you on the next one.